Welcome to Illuminati Silver, where we tell you the truth about silver. Today is Sunday, the 25th of July, 2021, and we're publishing our Gold and Silver Weekly Update for the week ending the 23rd of July, and also providing our forecast for the coming week. We have to advise that the contents of this video are the same as the regular weekly update, which we published yesterday. However, we have found that using different headings and thumbnails ensure that we reach more people. So if you listened to our update yesterday, then there is no need to listen further, and thank you for at least clicking on this video thumbnail. If not, then enjoy, and hopefully give us a thumbs up and subscribe. So let's get to it. Gold fell $10 last week, falling from $1,813 to $1,803, having hit a high of $1,825 and a low of $1,791, a fall of 0.5%, and slightly lower highs and lower lows than last week. In sterling terms, gold finished the week at £1,311, that's down £5. And in euros, it closed at €1,531. That's down €4. Following the previous week's fall of 43 cents, silver fell again last week, an additional 50 cents this time, falling from $25.70 to $25.20, having been as high as $25.77 and as low as $24.78. And we did think at one point it might close below the $25 level. This represents a fall of 2%. In sterling terms, silver closed at £18.33, that's down 32 pence on the week. And in euros it closed at 21.41 euros, that's down 0.36 euros. The gold to silver ratio rose again, this time from 70.5 to 1 to 71.5 to 1. Bitcoin is up $2,400 from our report of last week and currently stands at $33,685. It's been as high as 33,817, so it's very near its high for the week, and as low as 29,317. We've seen some quite significant gains in the past 3 days. On the issue of Bitcoin, quick shout out to a new channel we set up, or in fact one that we replaced the Richard and Greg channel with, called Crypto Plus, where we will be speaking about cryptocurrencies, definance, and alternative investments. So far we've focused on cryptos, but that will soon be changing as we should be speaking about other investment types and categories too. Going back to how the markets fared this past week, we can see that the Dow Jones closed on Friday at 35,061, up 238 points on the day and up 374 points on the week. The S&P was up 44 points and closed at 4,411. That was 44 points on the day rise, but actually up 84 on the week. And the Nasdaq Composite closed at 14,836. That's up 152 points on the day and up 409 points on the week. So all the losses we experienced last week have not only been reversed, but positively improved upon on all three indexes. Brent crude closed at $74.10, up 51 cents on the week. And WTI crude closed at $72.07, and that's up 26 cents on the week. The dollar index stands at 92.91, and that's up 0.23 on the week, though it had been above 93 for I think 2 or 3 of the days last week. Now, we concluded last week's video with the following forecast, quote, "So we're leaving our gold trading range unchanged, with gold trading between 1750 to 1875, with 1700 to 1900 as outliers, and silver range trading slightly lower, between 25 and 27, with 24 to 28 as outliers." Well, the range gold traded last week was one of the tightest ranges in a long time, And frankly, that's quite a thing to say, considering that gold has traded quite tightly for a while. The difference between its high and low was just $34, difference between 1825 and 1791, closing just above the psychologically important level of 1800, with trading within the mid-range of our forecast. Silver traded within what appears to be a common range recently by approximately $1. If memory serves me correctly, the last 3 weeks it's been similar. This week, 99 cents. The difference between 25.77 its high and 24.78 its low, closing at 25.20, again mid-range and within our forecast, but towards the lower end of that forecast rather than the top or the middle. So let's first look at gold and see what's happened. Well, gold opened lower last week, quickly rose above Friday's close, oscillating on Tuesday, and then operated in negative territory the rest of the week. But please bear in mind our comments about it operating within a tight range. Now, we listened to an analyst whom we quite admire, if truth be told, Gary Wagner, on Kitco. Now, he is basically a technical operator, but unlike a lot of these pump and dump commentators, does tend to say things exactly as he sees it. And he really expressed what we've been saying since the channel began. He confirmed on Kitco that in currency terms, rightly or wrongly, the US dollar is broadly regarded as the safe or go-to currency that the world will flock to in times of crisis and uncertainty. This comment is not only factually correct, but also undermines all of the nonsense from the pumpers and shifts of this world, who for decades have warned us and predicted the imminent collapse of the dollar. We have often said, many currencies will collapse before the dollar will. Now yes, we agree, fiat currencies are dangerous and will eventually end. But in a world of fiat, the dollar reigns supreme. Now we admit that won't be the case forever, but it's still going to be some time before it is surpassed. Now frankly, Gary Wagner also points out that the dollar's strength, even during times of weakening yields, which seems paradoxical, the dollar strength is holding gold prices and precious metal prices back, or at the very least acting as a strong headwind. However, in addition to that, are also the availability of other asset classes taking priority. Let us just read to you briefly what he has stated on FX Empire only yesterday. Quote, "One of the primary asset classes which have recently been pressuring the precious metals to lower pricing is the US equities market. The risk-on asset class continues to trade to achieve new all-time highs. Today, for the first time in history, the Dow Jones Industrial Average closed above 35,000. The S&P also hit an all-time high of 4,411 after factoring in today's gain of 1.01%. The Nasdaq Composite had a gain of 1.04% that took the tech index to record highs as well, reaching 14,836. With all three major indices closing at all-time highs, it is obvious that capital continues to flow into the US equity markets. The combination of higher US equities, rising yields on government debt, and US dollar strength have pressured gold to trade in a consolidating range around $1,800 per ounce." Unquote. Now that said, he's placing quite a lot of store on next week's FOMC meeting. This is what he says about that. Quote, "The key to the gold prices is going to be next week's FOMC meeting, when the Federal Reserve will announce its current monetary policy. Chairman Powell's last statements came earlier this month when he spoke to Congress. During this discussion, he stated that he thinks the sharp rise in inflation seen so far this year will fade away. He also said that it would be a mistake for the Fed to act prematurely, to address the high inflation that, in the end, should be transitory. He also stated that while reaching the standard of substantial further progress is still a way off, participants expect that progress will continue. That being said, the expectation out of next week's FOMC meeting should be that the Federal Reserve maintains its current monetary policy, which is extremely accommodative and dovish. If that is the case, we should see gold prices react in a bullish manner, unquote. So Gary is forecasting some bullishness for gold this coming week. Now, looking at the technicals, we can see that support lies near the 20-day moving average of $1,799, though we think that's a little tight, really, and resistance at the 50-day moving average at 1835. Those who love technical analysis will point to a tightening of the consolidation, which generally forecasts a breakout when you have this tightening wedge, and depending upon which side of the fence one sits, it will either go higher or lower, but a breakout. The MACD histogram, though, still points to consolidation, but there is, from the charts, a short-term and small uptrend occurring. Now, apart from a brief moment last Monday, silver has operated in negative territory all week. Again, to put it into perspective, the margin was just under $1, but as we have reiterated on numerous occasions, if there is any doubt about economic recovery, the industrial demand for silver, or the expectation of the industrial demand for silver, will be lower. And so it not only is affected by the rise in the dollar, but also by lower industrial demand expectations, or higher industrial demand expectations when things are going well. If countries, though, go back into lockdown in the coming months because of the Delta variant, then we could see silver fall considerably lower, though we suspect there isn't really the political stomach for increasing lockdowns. Whether there is amongst the political class is one thing, but the public certainly appear, if we look around the world, not to be very supportive of such a measure. Now, technically, we have support at $24.75, which is July's lows, and resistance at the 20-day moving average of $25.88. The MACD histogram is also suggesting lower prices. Now, during the course of the week, we've had mixed economic data. Now, a quick plug to what we're doing each day, and for which we are getting some criticism. Every morning, we're providing 10-minute updates of where we are in relation to news headlines, economic announcements, and market prices. Now, we have to say, frankly, for the effort, the viewership numbers are really not worth it. However, we do this because we know there are a number of you who find it useful, and it also provides a framework for what we produce on the weekend. Now, we have received a few comments telling us that people do not want us to read out what is printed on Bloomberg or Reuters or elsewhere. Well, we're not just reading it out, but also passing our comment on it and what it could mean. Now, we accept it's not the most thrilling of ventures, but it does encapsulate what we regard as being the main aspects that could affect markets, and you're getting this on a daily basis. Now, we could do what every other channel does, show you a piece of gold and silver and say how lovely it is. And occasionally we've done that. But frankly, we thought our audience was a little more sophisticated and really wanted to know what is affecting or likely to affect the markets, especially gold and silver prices, of course. Now, if we're wrong, please tell us, and we'll stop doing it. Frankly, I would much rather lie in bed for an extra hour if what we're doing serves no purpose or derives no benefit for you. Now, going back to the economic data. We had disappointing weekly jobless claims figures, which rose from 368,000 to 419,000, against expectations of 348,000. So a fall was expected, not a rise. Very disappointing. But do not underestimate this telltale indicator as to what the Fed is likely to do. You see, you have to bear in mind, the Fed has promised maximum of full employment before it starts to roll back its QE and begins to raise interest rates. If jobless claims are rising, then that tightening will be delayed. Now, okay, it's only 1 week's figures, admittedly, and the trend is more important, but do you see why it is important to cover these things? Existing home sales were up, but Friday's PMIs were mixed. The market manufacturing flash PMI came in at 63.1 for July, compared with 62.1 for June. But the services flash PMI came in at 59.8 for July, compared with 64.6 in June. Quite a dramatic fall. So mixed message here. Stronger manufacturing, weaker services. Now, admittedly, there was not a considerable amount of data last week, but we have more pertinent and potentially impactful data this coming week. On Monday, we have new home sales for June. Tuesday, durable goods orders for June, consumer confidence index for May, and housing vacancies for quarter 2. Wednesday, we have the advanced trading goods for June, the FOMC announcement, and Fed Chair Jerome Powell's press conference. Important day. Don't miss that one. Thursday, weekly jobless claims, GDP first estimate for quarter 2, and pending home sales index for June. And then on Friday, another important day, the employment cost index for quarter 2, personal income, and consumer spending for June, plus core inflation for June, and the UMich Consumer Sentiment Index for July. So, most of the excitement will be Wednesday, Thursday, and Friday. With mixed economic data, we expect the Fed still to continue with its dovish tone, but potentially adding perhaps that they will continue and react to the data. Now, this should prove positive for gold and silver. But if the economic reports are poor or below expectations, we can expect to see silver prices hit down again. Equally, if the number of infections and hospitalizations in the United States increases, the same will apply. Now, also briefly on the political front, China is imposing sanctions on several US individuals and organizations in response to recent US sanctions on Chinese officials in Hong Kong. The counter-sanctions come days after the US Deputy Secretary of State Wendy Sherman is due to visit China. The US sanctions on Chinese officials in Hong Kong were because of their role in the security crackdown in the territory. So all is not well politically with China. Now, there's a lot more political stuff we could cover, but this video is now becoming quite long. So where do we see gold and silver prices moving next week? Bearing in mind that we continue, to a very large extent, still be reliant on the movement of interest rates, bond yields, and the US dollar value. And still potentially some nervousness in the equity markets despite their all-time highs. So we're expecting a little more movement in gold and silver prices this coming week. Obviously data dependent. So we see gold trading between 1750 and 1875, with 1700 to 1925 as outliers. So depending on Wednesday, it could prove quite bullish for gold. Equally, however, if the language is hawkish, the opposite will happen. And we see silver's range trading slightly lower between 2450 and 2650, with 2350 and 2750 as outliers. So although we do see silver moving broadly in the direction of gold, we don't see it moving as positively on the way up, and we see it potentially more negatively if the price were to go down. What do you think? Please do share your thoughts. They are all read. Also, please do not forget to subscribe to our Crypto Plus channel, which we've mentioned earlier, and we've placed links to all of the videos mentioned and the Crypto Plus channel below. Thank you so much for listening. If you haven't done so, please subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they're published. Also tomorrow, we will probably be producing 2 videos, one which will be a repeat of this but under a different header, and we will announce that at the beginning of that video. So if you've listened to this, there's no need to listen to that one. and also another video on what is actually happening economically. Finally, we wish you a safe, enjoyable weekend and prosperous week ahead. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.